Welcome to Yahoo Finance's Morning Brief. I'm Julie Hyman. Here with me this morning, Dan DiFrancesco, Business Insider Today, executive editor and anchor, and Yahoo Finance's Dan Halley. We got a double dose of Dan today, Dan squared.
Yes.
Pair of Dans.
Yes. Are you a Dan the Man guy, or?
I'll take Dan the Man. Just don't call me Danielle. That happened in middle school, and not great. Principal called me down. Danielle.
If you were in France.
Tough.
Jean Danielle. That was my name in French class.
Exactly.
Did not do well in French.
Usually we call him by his last name. We haven't howled your name in a while.
Howl.
Howley. That's usually what we do.
The Wolfman. Well, we got Ethan Wolfman, so that
That's
he kind
true.
of stole that from me.
In any case, we have two Dans. And we've got tech selling off this morning. So I'm glad we have Dan Halley, who covers tech for us. And again, at least some of it seems to have to do, it's sort of a chicken and egg situation. We had the chips sell off here yesterday. Then you have Korea selling off, so that's then feeding back into the sell-off here this morning. Some interesting moves in South Korea, because South Korean regulators who have been talking about the speculation there, we've all been talking about the speculation there, they finally come out and said, we're going to kind of try and cool things down. We're not going to allow any more new listings of single stock leveraged ETFs because the leverage there has gotten to such a level. They're going to change some of the requirements for people investing in leveraged ETFs here. So at the same time, the Bank of Korea, by the way, in the background, raised rates today. So you have all of these things happening in the stew. Then you have Taiwan Semiconductor coming out and raising its outlook. So I don't know. We keep having this sort of fundamental discussion versus the speculation and trading discussion. So I don't know. What do you, out of all that whole big stew, what are you watching?
I think it's going to be interesting when we start to see U.S. chip makers, U.S. chip companies start to come out, right? Yeah. TSMC is the maker of the chips, but I think that the chicken and the egg bit is 100% true, because I think what was it? SK Hynix started trading on Monday. It fell in Korea, and then it fell in the U.S., and now it just keeps, it's the ping pong back and forth, and it's it'll go up, oh no, it'll go down because what's going on in Korea. I think it's two totally different aspects of the same company, right? It's shares that have been trading for quite a while, and then you have the ADRs here that are trading, and it's, Americans' first crack at it on its own, right? And so it just feels as though there should be a little bit of a disconnect between what's happening, but obviously there's not. I think that it's going to be interesting, like I said, when the U.S. companies start to report, because this is the cycle that we go through seemingly every quarter now with AI, is everyone is, if the performance is good, everyone goes, well, it's all about the balance sheet, right? It's everyone's coming through with results that are beating expectations. It's proof that the AI trade is real. A few weeks go by, and then everyone says, well, is it really real? And then we go back into earnings again, and they say, well, look, the earnings are the proof's in the pudding, and then it, so I think it's, but we keep talking about this, and we've been talking about this for a few years now. How much more can we see in growth overall for these different stocks? And I think one of the interesting aspects of this is what we've seen with companies like SK Hynix, where it's kind of percolated out a little bit, where it was originally this one company, NVIDIA, and we saw, some more chip companies kind of get in there. People said, oh, well, Broadcom also makes chips. And well, yeah, okay, sure. And then it was, okay, CPUs, right? That's huge. And then, oh, no, wait, memory. And so at a certain point, I assume networking will get involved.
Well, networking's already gotten involved a little bit. Corning, Dell, it's been interesting, the different waves. Dell, by the way, fell a lot yesterday. It's down again this morning. So to your point, we always talk about a roller coaster, but to think about that visceral feeling of and then that queasiness that comes. Yeah. I feel like we're definitely in that queasiness phase.
Yeah, also I think enough can't be said about these leveraged ETFs and how much of an impact they're having. The fact that they need to recalibrate them every day. The fact that since this year there's been 55 curb trading on it and 7 outright stops, which since they've enacted that in 2000, it's more than half. It's caused so much volatility. I think you look at TSMC, like you said, coming out and saying, yeah, things are good, reporting demand is still strong. I think this is much more of retail trading just kind of, which is a big part of the Korean markets getting crazy. And for the regulators, and they're acknowledging this now, it's like, oh no, this is the consequences of my actions. Like, you want to keep money onshore, you don't want money to run over to Hong Kong, so you create these very highly levered, highly volatile products. Everybody jumps in, and now you're like, we don't like this anymore, now we need to change it. So it reads to me much more of, this is the chaos created by this crazy financial product versus real concern about like cracks in the armor.
Right, because you look at how investors are spending their money and what regulators are doing, and then you contrast that with, yesterday, ASML talking about increasing its capacity. Then today you have Taiwan Semi saying CapEx is going to be 60 to 64 billion this year. That's at least 4 billion higher than they had said before. So you have these chip makers that are saying, like, we're willing to spend the money to expand our capacity because we see the demand there to be able to do this. But how do you price that as an investor is always the tricky part.
I also think that to me the thinking is, it feels as though a lot of what's going on is people not understanding the fundamentals of these different businesses, right? At first, I think for retail traders that can be an issue, just because, like I said, there's this bouncing back and forth between different types of.
I mean, but the fundamentals of the businesses seem good,
exactly,
right?
Exactly,
like it does look like
right.
that. Particularly the memory businesses, they've kind of remade the cycle for right now, or at least extended the cycle. What's also interesting, if you take a step back, and our Jared Blickery wrote about this, is that, like, you've seen a rotation here in the U.S. out of the chip makers back into the hyperscalers, maybe ahead of earnings, just like how these things go. And yet the S&P 500, it hasn't retaken its high. I think it was in early June. It dipped. It's come back. I was looking today at the numbers of like the groups that have led it back, and it's financials and industrials and communication services. It's not like the infotech index. It's not the chip makers, for example. So, I guess we'll have to find out when we get the hyperscaler earnings if they're going to, if that validates some of the buying that we've been seeing, some of the rotation.
It just feels like everybody's in a race to try to get ahead, right? Because you have the two big, you have the kind of the picks and the shovels of people, and the people trying to actually mine the gold. And then they kind of run from one to the other. Now we're going to have these earnings come up in a couple of weeks, and maybe after everyone's kind of jumped on the Mag 7, they kind of jump back and say, oh no, actually the real value is the people that are making the shovels. And then in a couple of weeks they jump back, and everyone just kind of wants to get just ahead enough where they can kind of catch it at the high, sell it, and then kind of wait for the dip and get on the other end.
You know what? This kind of takes us to our next question, which is about AI return on investment, right? And so that's one of the things we're waiting to find out. I've been looking through the companies that have been reporting thus far, who are not tech companies. Are they getting return on investment? And JP Morgan, you guys wrote about this at Business Insider. JP Morgan's Jamie Dimon came out and said, we've had areas of the bank where we've cut jobs by 30 to 40% because of AI. But he said he thinks it's going to flow to the consumer. It's not necessarily going to like save them a lot of money, but it might make them more money at some point. But it still doesn't feel like we're at that point.
Yeah, and he also said a lot of those cuts were not necessarily outright layoffs, but repositioning those people within the company. So I think it's still we're still in that experimental phase. They're still getting the productivity gains. I think, and I believe the B of A CFO mentioned this, I think what's going to be really interesting is around token prices and how that starts to impact things, and this concept, we had the token maxing, but now we're going to have the idea of model maxing. It's like, where do you want to spend the money on the super high-end model, and where do you want to go with the lower cost model, and how does that kind of shake out? But agreed, the thing that I always hear from tech people, and Dan, I'll be curious if you hear this as well, is when you see people outright cutting headcount because of AI, it's not necessarily because they're getting productivity gains, it's because they need to subsidize those AI investments and save money. The people that are actually getting the big gains are hiring because they're like, we're doing more business, we're being more efficient. So that's at least my thing.
That's honestly been one of the counter narratives to the AI is going to cost everybody their job, is that, well, no, if we're more efficient, we hire more people, then we'll be able to have an even more productive business and bring in more revenue, whatever that business happens to be. I think it's interesting, though, because we've also seen some companies do layoffs prematurely, saying, well, AI will be able to handle this, and then kind of come back with their tail between their legs and say, actually, you know what, can you guys come back? Because we way overshot what we thought AI could do. And I think it's still this very much experimental phase. I mean, we're still talking about, will AI cost people their jobs? And we're seeing some layoffs, yeah, but we're seeing some new jobs pop up as a result. I do think, though, it is still, though we've talked about it for 4 years now, it is still very early in the rollout of this kind of major technology. And I think everybody wants an answer now. And sure, hey, if my job was on the line, I would want an answer yesterday to know, do I have to do something to better my chances of not getting laid off? But I think it's still too early, and the decision makers don't even know what decisions to make.
And the other thing I would say too is like all of this hype about it being transformational technology. If you look at what companies are actually saying, it looks, at least now, especially in non-tech companies, more like just sort of garden variety enterprise operational efficiency.
Yes.
Right? So that's a little bit what Jamie Dimon's talking about. I talked yesterday to the president at Aetna. They run this survey where they talk about the relationship between healthcare providers and insurance companies, and the sentiment has been improving a little bit, and they attribute part of that to digital tools. But that's stuff like getting pre-authorizations in a more efficient way. I'm looking at the United Healthcare. They're having their I guess they just wrapped their conference call, and they're talking about AI, but it's helping us move faster. We're using it to improve service interactions, reduce administrative burden, support better service decision making. So like it's listening capabilities that they're using for their providers, but like that doesn't sound transformational to me. That sounds like making everybody like whatever slice of percentage more efficient.
And that's where the ROI conversation comes in, because it's like, if you're that much more efficient, but we're paying that much more in tokens, are we really getting a benefit?
Yeah. I think it's also you have to take what the AI companies say and the hyperscalers say with a big old grain of salt, right? Because the more they can hype up what they're selling, the more people buy into it. And, so, the whole idea that it's going to be the apocalypse because of AI, that's a good selling method. That's, well, it's that strong. Maybe I should invest in it. I do think that, though, Julie, you're right, that it is something where, it's going to improve the way people do their jobs generally, right? And the way I've kind of talked about it is the internet almost, right? Maybe, the internet was foundationally transformative, right? We're on the internet right now. You can order a car anywhere in the world. There's whole economies that started as a result of that. Will AI do that? I don't know. Maybe it'll just help make our lives just a little bit easier in certain areas. And then in other areas, it'll be transformative. Life sciences, things along those lines. The real important stuff, not filing spreadsheets, but like the big brain stuff.
So curing cancer.
Yeah, stuff like that. I think that's kind of there's that kind of two minds of it. And I do think, though, that for the average person, it'll be, I think, just making the average rigmarole of the day get better. And that's seemingly what we're seeing.
Nothing, but
absolutely
is it worth it?
You're right.
The question.
And I also think there's a big, massive caveat with all these conversations that AI is a great scapegoat. If I'm an executive, do I have to admit that I messed up and I made a bunch of wrong strategic decisions and I overhired in certain areas after COVID, maybe when hiring was crazy and rates were at zero? Or can I say, guys, we're getting these incredible gains from AI. We need to streamline. We need to be flat. That's why we need to cut. That's a lot easier pitch than saying, actually, maybe I'm not as good of an executive as I thought I was.
Yeah. So that's what all of this means, I think, for like the X tech companies. I think when we start to get into the hyperscaler earnings, like there's been this whole discussion about free cash flow at those companies. To your point, we'll see if people actually pay attention when they're reporting, or if it's like in the lull after earnings, all of that talk starts to spark up again.
Well, it's funny because Meta, Microsoft, they've been, as soon as they start talking about spending more, the stock just drops, right? And I think it's, Meta.
It depends on which company. Initially, they were all announcing spending plans and everything was going up.
Everything went up, and then they announced it again, and everything got smashed. And now it's kind of a mishmash where, okay, Google's going to spend more. That's right, Google, it's going right. We can see where it's going to go. Microsoft, well, yeah, with Copilot, we're getting different reports that maybe people like it, maybe they don't. Meta, I don't know. You're making weird videos of dogs walking on their back legs with 6 shooters or something. It's weird. I think for Meta, though, whether or not there's two things. Microsoft has to talk about growth in Copilot seats. I think that would be huge. The issue with capacity constraints for them has been a problem for way too long now. I think they have to give some indication of when they we'll see the kind of end of the tunnel of that. For Meta, the big thing will be, will Mark Zuckerberg announce a cloud business? And that, I think, would be big for them. I mean, look, are they going to do it as a full competitor to the Amazons, to the Microsofts, to the Googles? Are they going to be a neocloud? Or are they going to go the route that SpaceX seems to be going, which is, we got some extra stuff, you want to buy it? It feels like a yard sale almost, right? Like, where we have that going on. So I think that'll be huge for Meta. Google, just keep doing what you're doing, I think, and Amazon ditto. I mean, it will be interesting, though.
Did you see OpenAI drop some new merch today?
Oh, yeah.
Did you see this?
I did not.
So remember the Palantir chore coat, which was one of my favorite things, right?
Yeah.
Which sold out immediately, apparently. So now OpenAI has merch. They have this like quarter zip that says research. They've got OpenAI socks with like the logo. Good research takes time.
Who's buying this stuff?
People, I mean, true believers, honestly. But it's also
or true believers, or people who think they can get $1 for it on eBay.
Well,
right?
that's the resellers.
also
The
true.
resellers,
Yeah.
it's got to be.
I would think that would be a lot.
But that
of
feels
it.
like a hot potato. Like, who's the end person who's like, what do I want to wear this morning? My OpenAI hoodie.
Maybe
I don't work there.
Maybe it's ironic.
Yeah, I mean, now you're like...
Or if you want to get yelled at on the street, you probably put that on.
Yeah, the irony lords, I guess, walking around Brooklyn being like, I don't really like OpenAI, but I wear an OpenAI sweatshirt.
I feel like there's a certain market.
You're probably
for that.
right. You're right.
I don't know.
That's so far removed from my world.
All right, let's switch gears. I guess this is a little bit of a hard turn, but it's something that everybody is talking about, and it is this parasite that is making people sick. You guys have been tracking it a lot at Business Insider.
Yes.
I still don't know how to pronounce this thing.
Cyclospora is the parasite, and I think Cyclospora cis is the actual illness.
Okay, thank you. But it's been, I think it's a big topic of conversation. It's affecting how people are thinking about what they're eating. And it's been affecting a couple of stocks also. The Taco Bells of the world, when there was a report that the authorities were investigating it. So for somebody who's been watching your coverage of it a lot, what stands out to you?
Yeah,
it's hard to put this in perspective, I guess.
Right, it's tricky because this isn't like out of nowhere. This kind of happens every summer, right? It has to do with the humidity and the rain, and to give a quick, hopefully you're not eating breakfast. Basically, this is water. This is when crops are affected by water that has had human feces in it, and you eat it and you get very sick. You don't throw up, but you have other issues in the bathroom. I know, this is great.
I like the universal sign.
Yeah, the bathroom. The bathroom. And so on the one hand, this kind of happens every year. Why I think people are a little freaked out is because, one, they have not been able to source it yet. The big hotspot seems to be in the Midwest, but they haven't tracked exactly what it is. A lot of people think it's tied to lettuce, but they don't know. It could also be tied to berries. So toddler parents are freaking out. We wrote about that. Like, what do you give your child? And I think what is interesting, though, is I view it as, does this fundamentally change some businesses' approach to how they handle food, right? So if you remember a few years ago, Chipotle had the E. coli
and
risk.
they had to redo.
And they redid a lot of their food, rethinking what do we want to bring in-house? What do we want to cook? So the other thing is, too, the numbers, I think it's right around maybe 7,000 either reported or investigating cases, which doesn't sound like a huge number, but this is a disease that or illness you can handle at home. You don't necessarily need to go to a doctor. So a lot of this is going unreported. It's not the type of thing you're going to run to a doctor. So the numbers are a lot higher than we think. But yeah, I do think...
Have you changed what you're eating?
So
I haven't really changed. Have you changed what you're eating?
Salad's gross, so
I'm
give me a sandwich.
I eat a lot of salad, and I haven't changed.
I have a hot take. I'm going to sound like a meathead here. I just think salad is a vehicle for protein. Like, we're in the protein era now. Everyone wants the protein max. They're putting in our coffee now at Starbucks. So let's just get rid of the lettuce. Just get the cooked stuff. If you're a vegan, that's fine. Get the tofu, whatever you want. But I did admittedly eat a lettuce wrap on Monday. So it takes a week to set in. So if you don't hear from me a week,
there's
then
like a ticking time bomb.
Yeah.
I feel like that too. I have not stopped eating lettuce. I have my typically agrarian crunchy approach to this, which is just go to your local farmer's market.
Yeah.
That's,
Sure.
The people who are looking you in the face are probably not the people who are,
if they are, you know where to go to find them.
Right. It's not to say it couldn't happen, but if the breakouts are happening in the Midwest and it's produce that's shipped from a single source, it is likely not your local farmer.
Right,
that
no.
is the source of that.
I also just think, eat a sandwich.
Yeah.
You know, ham and
could do that
cheese isn't
too.
going to make me sick. It's going to kill my cholesterol, sure.
But there's a new cholesterol pill that the FDA just
Saw
approved.
that.
Okay, we won't
Give me
get
that.
sidetracked with that. Last thing we got to get to, Kalshi has filed, they're exploring potentially offering new prediction markets tied to flight cancellations. And it would have to do with like a particular airport during a particular time. How many cancellations are there going to be? The airline industry, or at least like some representatives of various unions and stuff, they're not terribly happy about this because like there have been instances of people trying to affect prediction outcomes. Obviously the stakes of something like this are rather higher. I think I've been pretty open about not being a huge fan of prediction markets in general. Like this one, I don't know.
Yeah, is it worth it to get on the no-fly list to hit your calcium? I guess is the equation. I'll admit, so a couple things went through my mind when I first saw it. First, like the initial eye roll, like, oh man, you can really just bet on anything. And then I kind of, for a second, I thought, okay, well wait, maybe the whole thing with calcium pocket market is like hedge everything, right? So maybe there's a case to be made for instead of buying travel insurance, you try to like, figure out a hedge. But this is also for entire airports. So it's not necessarily a specific flight.
Right.
So that's where it gets tricky, where it's like, okay, I'm gonna fly out of JFK, I'm gonna bet that JFK is gonna have cancellations, but your flight could still make it out and others get delayed.
Yes, it ain't gonna make me feel any better, even if I make a few bucks, if I'm stuck somewhere. I'm sorry, like yes, I guess at the margins, fine, but I wanna get where I'm going.
That's true.
I also
Yeah.
just feel like, at what point do you just say, that's probably enough betting? What,
Never.
I mean, it's
Never.
We're not there yet.
I'm sorry, I don't mean betting, I mean
Prediction.
Predicting and investing.
Yeah.
Right.
Yeah,
It's not.
yes,
It's not.
sure,
It's
sure,
not
sure.
betting. It just feels very. I mean, yeah. I don't know what else you could like. How many potholes? I mean, have you seen?
Don't tempt them. Don't tempt them.
There are-
Dan. There will be other things they will come up with.
Have you seen that people will watch like a road camera and they have to hit a certain number of cars that cross like a certain roadway in like a certain amount of time, and it's like, do something. Learn an instrument. I don't know, man. Like that's just wild to me.
I mean, well, the other thing, you were talking about flight insurance. Apparently, Tarek Mansour, who's the co-founder of Kalshi, said something about like that some people in Florida, instead of buying hurricane insurance, are doing some of these contracts.
I
mean, no, thank you.
The other thing that's interesting about this is we reached out to, because in the proposal, and granted, this is a proposal, so nothing is official yet. They're just kind of throwing their hat in the ring.
Yeah.
They mentioned, oh, well, we'll use data from FlightAware, and we reached out to FlightAware's parent company, like, no one can use our data.
I mean, listen, if they did it, presumably Kalshi maybe would have to pay for the data.
Sure.
Or they would come to some sort of agreement.
Right.
But yes.
But it is interesting that, like, we'll throw their name in there, and then I will say, though, I know, so understanding you're not a fan, though, if you could hedge something in your life, is there a prediction market you'd say? I was thinking today on the radio buy-in, my daughter is not great sometimes, gets up a little early, so maybe I'd like to set a prediction market on that, and if she gets up too early, then it cashes out and I can buy my coffee, to help me out for being up a little bit early. I don't know. Is there we're in the world now where you can, hedge anything. So is there a risk like your train being late maybe? I guess
New York City subways.
Listen, I take New Jersey Transit, which is the worst.
Oh God, that's a good bet to always be late.
I don't want to hedge it. I just want it to be better.
Yeah.
Like that. But I guess I live in the real world, not in my fantasy, wonderful Jersey Transit world. All right, we got to leave it there. Dan Squared, it's been awesome.
Yes.
Thank you so much. Opening bid is next with Brian Sazi. Keep it right here. All right, good.
I'm not going to stand up here and BS you on what we are witnessing with SpaceX shares. It's not my style, so let me give it to you straight. The most hyped IPO in the history of American capital markets is now a broken stock, and that warrants being a problem to a broader market riding high on AI euphoria. SpaceX shares fell for a fourth straight session on Wednesday, briefly dipping below their $135 IPO price for the first time since the company raised a record $86 billion in its blockbuster Nasdaq debut last month. Feels like yesterday, but it wasn't. Shares are under a little bit of pressure this morning. Now, the 4-day losing streak tells you something critical, I think. The retail investor euphoria that launched this thing into the stratosphere has evaporated faster than anyone in the underwriting team was prepared to admit publicly. What makes this especially uncomfortable timing is twofold. One, SpaceX has its 13th Starship test flight scheduled for later today, a moment that should be generating the kind of headline-grabbing excitement that sends the stock higher. Instead, the market is yawning, which is about the worst possible signal you can send when you're a company whose entire valuation is built on the promise of an audacious, expensive, long-term vision that requires investors to believe unconditionally in what you are building. And number two, a series of restrictions on additional stock sales by insiders, employees, and early investors will lift over the next several months. In the first of these releases, rank-and-file employees and some early investors will be free to sell, get this, over 911 million shares on the second trading day after the company's debut quarterly earnings report. We don't have the earnings date yet, but it's expected sometime in August. I do want to inject a minor smile into this commentary, though, because I think the IPO is important to the broader space movement. I was reminded of that when I sat down for a new Power Players podcast with Baiju Bhatt. The Robinhood co-founder is building his own rocket company in Seattle as we speak. Take a listen.
It's pretty profound in the context of the space industry because it really puts into focus the commercial potential of the space industry as a whole. And to see sort of after the SpaceX IPO, a new generation of institutional investors, retail investors, and just the collective consciousness in the world that there is commercial opportunity at scale in the space industry, I think is hugely powerful.
All right, here are my opening bid roundtable. Nancy Tengler, Laffer Tengler, investment CEO and CIO, alongside Yahoo Finance's own Brooke DePalma. And as for a good morning to you all. And as I'm coming to you, as someone that has followed the space industry for quite a while, at least here at Yahoo Finance for many years, this is fascinating to see the stock price drop below the IPO price.
Yeah, that's right. And this is reminiscent of that Facebook IPO when we saw shares going lower after that company went public. So look, this is really a bet on Elon Musk, as we said before. You have those short sellers that have been betting that, hey, this valuation that they came out with, it's too high right now because there's still a lot to be proven. You've got Starship, that test that is going to be going on. It wouldn't surprise me, though, if that Starship test went well. Remember, this is the spacecraft that is going to be taking people, data centers, satellites. All of this is critical to Elon Musk's vision of putting data centers in space and then eventually taking people to the moon and later to Mars.
Nancy, you have liked SpaceX. Has this pullback from the IPO price, has this shaken your confidence in the company at all?
No, it hasn't, Brian. And while Inez is right, I believe it will go well and it is critical. I do think that this is a stock you're buying for the next 3 to 5 to 10 years. It's in our thematic portfolio, which has a focus on space. So I just view this as an opportunity. We've added to it as it's gone down, and we will continue to do so because we initiated with a very small position. We were, in there slugging it out with all the big guys. So we will continue to add. I think it is a bet on Elon, and that's been a pretty good bet in the past. He has described himself as programmed for war, and he frequently teeters on the edge of disaster and pulls back just in time. So I'm long-term optimistic. I don't invest for the next 3 to 4 weeks. It's the 3 to 5 to 10 year period.
Nancy, what would get you more concerned with that longer-term bullishness you're talking about? Would something like, let's say, Starship comes out today and that launch doesn't go as expected? Do you overlook that and still look out 3 to 5 years, or would that be a point you say, you know what, maybe the market's onto something here?
Well, the market's always right, Brian? So I think we're looking at this as a stock. It has parallels to the Meta IPO, but in our view, it's analogous to Amazon, which was a company that changed the way we lived. It's had very long periods of underperformance, but if you've owned it since the IPO, you're up 243,000%. So we believe this is one of those companies. What would shake our confidence? I mean, there's a key man risk to be sure, and that would definitely shake our confidence.
Brooke, I think getting a little bit lost in the sauce here with SpaceX, and I was reminded of this when I talked to Baiju yesterday. I mean, he's literally building rockets to get his satellite technology into atmosphere. Is the difficulty, Brooke, in making these things happen? And investors, they're day to day, they're in and out, trading the stock, however they might see it. But these things you don't achieve what Elon is doing overnight. I mean, you have to have a lot of things go right over a series of years.
A lot of things go right, Brian. And every single analyst that I've been reading, when they have their coverage, I mean, mostly bullish on the street when it comes to these analyst ratings that we're getting so far before that first quarterly report as a public company. Their bullish take is that this is a long-term bet. To Nancy's point, this is not something that's going to happen in the next coming weeks. I mean, this is years in the making, and yet we're seeing this volatility, this pullback in the stock. And when you think about short sellers, right now they're sitting on $4 billion
billion in cash. And this is a stock that is heavily shorted. When you think about that, roughly 28% of all shares are available to trade. And so the float is pretty high on this stock. But ultimately, investors, analysts on the street saying, hey, this is a long-term company. And like Nancy's point, you have to believe in Elon Musk's really out of this world vision.
Yeah, no, fair enough. Nancy, let me get back to you. Last year, the market was driven by AI, some of those core AI names like NVIDIA. This year, we saw that rotation into semiconductors and then memory chips and a SanDisk and Micron. Well, now Micron and a SanDisk, those stocks are getting slammed. I mean, I looked at SanDisk this morning, I think down 30% over the past month, somewhere around there. Help us understand that market move and where might all that money be going?
Yeah, so you've seen a lot of volatility when it comes to that memory trade, the semiconductor stocks, and it may be going to some of the big cap names because the big tech names, because you're looking at Apple that's at all-time highs. In fact, Apple out of the Mag 7 is now the outperformer for this year to date. It's up 20% year to date, just hit a record high yesterday. And you're also seeing Alphabet that's up more than 3%. So perhaps there's a rotation going in that direction. I will say there are sort of concerns about the rising costs when it comes to memory. You have TSMC that reported its results, and they also their outlook for revenue is up more than 40%. That outlook. Also, they are talking about increasing capex because their customers are because they see this AI mega trend. But still, they did note rising costs. And in fact, their margins for the third quarter, perhaps that's not what the street is liking, in part because of rising costs and also capex and fabs abroad. So there is that concern that perhaps these prices, even though enterprise is spending so much on memory and AI infrastructure, at some point you have to think to yourself, what is one man's profit is another man's spend.
No, good point there, Nez. Nancy, let me get over to you here. These sell-offs we're seeing in Micron, SanDisk, these have been the market leaders pretty much this entire year. I mean, these stocks have had tremendous runs. How concerned are you about these sell-offs? And is there any read-through here to a broader market still trading near its highs?
Well, I think whenever you have an economy and a world really that's in transition, this is indeed the fourth industrial revolution, you do have to expect, and I think I talked about this the last time I was on with you, Brian, which was there is going to be a big summer chop. And so you've got the algorithms reading the headlines, the hedgies jump in, there's less liquidity because a lot of people are in the Hamptons, and that's a real thing. So I don't view it too seriously when I look at a company like Micron that's now signing 3-year contracts, has margins of 84%. Am I concerned that the margins are going to go to 70? The market will hate it, but this is what happened with Microsoft during the launch of, and really the momentum of Azure. There was a time when it was growing at 92%. The stock outperformed for a number of years after it began decelerating, law of big numbers. So I think CapEx spending is a sign of strength. I know the market disagrees with me. So debt-funded CapEx spending is another story, but you still have some of these mega caps that are generating tens of billions of dollars in free cash flow every year after spending tens of billions of dollars. So I think you use it as an opportunity if you're a long-term believer. And we have a very low cost in Micron. I'm not going to chase it here, but if it continues to decline, we will in fact step in.
Nancy, why do you like a Micron over SanDisk?
I mean, it's just what we know. We're focused on U.S. companies, and it's a name that we have watched and owned for a very long time. We're at a full position, so there's no special reason.
Brooke, just like what you were mentioning on SpaceX and the analyst community who just launched coverage on SpaceX about a week and a half ago, 2 weeks ago, I still have a few notes coming in on that. They remain unshaken too on a Micron and SanDisk, despite some of the moves, really the severe downside moves we've seen over the past 2 weeks.
And Brian, I think that's the case here, is just how long will this last and how long will this memory shortage continue? And what I'm hearing from so many experts that this is going to continue well into 2028, that this is going to hold on. And right now, some of these companies have the upper hand as this AI builds out. And I think that's the narrative that they keep holding on to and keep referring back to. Of course, after a tremendous run up so far this year, this slight pullback isn't really waving or, interrupting too much fear on the street. And as Nancy said, I like that. Maybe people are just in the Hamptons.
Yeah, we all should be in the Hamptons. Like, we're still working hard. We're still making it happen. So, look, we can't have it all. And Nez, real quick, on the SpaceX, on the Starship launch, like, what are you watching for? And how excited are you about this?
I'm super excited. I mean, anytime that there's a launch, it's amazing. I have my daughter watching launches now, and she wants to take a rocket ship to the moon. So look, this is super exciting to be able to watch this. I'm just going to watch that it goes successfully because, again, this is like sort of one of these next steps. It is a must. It's a critical step for what Elon has envisioned and for really the whole rollout when you're talking about taking data centers into space and everything that is going to happen in space. So it's exciting.
Also exciting, all this amazing analysis. A big thanks to Nancy, Brooke, and Inez. I really appreciate it, guys. Hopefully, we can do this from the Hamptons at some point. Coming up, tech stock picker Dan Ives is here to share more about his new company and hopefully for all of us, offer up his first 100 top calls for the next 25 years. Psyched to see Dan. I'll be right back. Being a former stock analyst that couldn't have cared less about going along with the consensus and making friends, till this day, I still appreciate a Wall Street analyst willing to stick their necks out to make a bold, well-informed call. That brings me to my spotlighted guest today, whose work on tech I have been following for years. Why, you ask? Because he has been early and right on tech time and time again, and hasn't been shy to go against the grain while others have their heads up their asses. And two, I suspect he's about to make a few more bold calls, seeing as he just opened his own modern merchant bank, along with several Wall Street veterans. Yorkville Eyes & Co. partner and senior managing partner Dan Ives is here. Did I get all that right, dude?
Dude,
you seem like the same guy to me, man. Like, it's good.
I'm the same guy.
You're the same guy.
Exactly.
How's it feel like you have your own name in the building now? I mean, it's pretty cool.
Look, me and you've known each other for decades. Yeah. And look, for me, from a Wall Street perspective, it's like this was the evolution and the next step in my career. Because I wanted to do something to really build what I believe in. We're talking about modern merchant bank, Yorkville Labs, that could transform Wall Street, because I see the gaps. And when we talk about AI, energy infrastructure, it's to build a one-stop shop bank. And that's something I'm just so excited about. And especially, you know, I get a lot of questions like my role. I'm still be covering tech stocks, the same, you know, a lot of the names that we're very familiar with. But this is really to sort of build something from the ground up.
There's the millions of people in Yahoo Finance that have followed your work for many years. They may not be familiar with a merchant bank. Like, what is that, and how will this be different than what you were doing before?
Yeah, and if you go back to like Robbie Stevens, Thomas Wiesel, to some extent the early days of Jeffries with Handler, like what he did. Look, a merchant bank is basically, okay, you have research, you have banking, you have trading, but you actually have capital that you could ultimately, alongside, you have partners, whether it's investing, whether it's ultimately skin in the game as well. And the reason merchant bank is so important, private companies, public companies, okay, it's very easy to say you should do X, Y, and Z, whether that's on as a bank or an analyst. This is to really have a company that has all those, you know, all those skill sets that companies from private to public could come to us and ultimately take them through that journey. And we've already done a number of hires. We have many more interested in coming in. Because look, this is something where I really truly believe it's seen around the corner where I think there's a huge gap.
So all new firms of this kind, they launch with bold calls. Have you initiated coverage on any names? And like, what are some of the biggest things you're going to come out of the gate with? Yeah,
and again, when I initiate, I'll be right here.
I appreciate it. Yeah, you better be.
I am. Look, the fourth industrial revolution, as I've talked about, I could argue, if I felt like we were in the 7th, 8th inning, I don't even know maybe that I would have done this, right? It speaks to my view, 3rd inning, 1 out, man on first. And you know, that's something that fits into so many of my themes, whether it's on AI, infrastructure, cybersecurity, software. Look at what Apple's done, right? I mean, if you go back to haters, you know, they look at Apple and they're like, oh, they're out of the AI game, but you know, I don't have a price target right now, but just look at that stock today, okay?
Yeah.
So it just speaks to my view. There's so many opportunities. I think investors are still underestimating the scale and scope of this broad theme.
All right, let's talk some stocks. I imagine you have a little more leeway now than what you did in your prior firm, SpaceX, below its IPO price. What do you think?
I mean, like, look, we've talked about it. If you go back to look at Amazon on the IPO, look at Facebook on the IPO. If you look at these with lockups, and especially with this and a lot of the indexing over the course of months, there's gonna be a lot of volatility. But I think investors that are looking at SpaceX, they're saying, okay, what could this be over the next 2, 3, 4, 5 years? And it's hard to say fourth industrial revolution without SpaceX. But any company like a SpaceX, the valuation support is not there.
I mean, do you think if SpaceX goes the way, you mentioned Meta, goes the way of then Facebook, where the stock was, I mean, from the time of the IPO for maybe 18 months after, it was dead money. It was straight down. Could that happen with SpaceX?
But Zuckerberg pre-jiu-jitsu, okay, even though he wasn't as jacked as he is today.
He is pretty jacked.
He is pretty jacked.
Almost as much as me.
Yeah, almost. I'd put you above him. Yeah, okay, so, but that could be another show.
I have high tea.
That could be a whole nother show, okay. So, but the reality is, like, when you look at what Zuck did and, you know, with the team, they had to execute. I mean, the reality is when these companies go public, whether it's what SK did last week, whether it's SpaceX, whether it's Anthropic, OpenAI, look, the golden path's there. but you have to execute. And if you execute, everything else works itself out. But that's the risk and reward for any of these.
Is this the moment in SpaceX where if you sell it here 5 years from now, you're like, what the hell was I thinking?
Look, and I think you're going to have both sides of that, right? Like in terms of how investors view it. I mean, I think it just comes down to a name like SpaceX. They're going to be central to this broader theme that we see in terms of AI revolution, because it's also my view when it comes to Musk, like Tesla I've talked about, the chances that over 80% we talked about before that they were going to acquire Tesla. And this is essentially Musk. A lot of it is really, it's betting on Musk. It's betting on Musk as much as it is SpaceX. And I think that's what so many investors are doing.
Outside of SpaceX, we are seeing large sell-offs in Micron and SanDisk. And on the one hand, Dan, I get it. These momentum stocks, we got a little whiff of a Fed rate hike. Those names are going to probably unwind those gains. But I look at the fundamentals of both of these companies, and it's hard to make the case that SanDisk is worth 30% less today than it was a month ago.
Yeah, I think part of what's happened, look, the golden childs of this AI revolution, it was over the last few months, it's memory stocks. I mean, a lot of times if you go to, you mentioned Kospi 2 years ago, someone would have to Google it. Now, Kospi, New York City cab driver.
So we start our whole day with looking at the Kospi.
Dude, cab driver coming here, he's looking at the Kospi. So the point is that it just shows memory stocks have really been front and center. So I think you're seeing basically maybe a little bit of a rotation there. But then I'd argue on the other side, look at where like NVIDIA, what's happening in that stock. Look at Microsoft. Look at, you saw Buffett with Alphabet. I mean, look what's happening in terms of that name. So I do think that we're going to continue, and we've talked about over the years, like we're going to go through these rotations in this AI revolution as it plays out. But as you know better than anyone, it comes down to earnings season. You have to show the monetization piece. Because right now it's just CapEx. You need to show monetization piece as that plays out.
Is Palantir still the Messi of AI? And then aren't they, when Palantir reports soon, isn't that report going to be so strong that they're going to just destroy the short sellers? Like Palantir, every single quarter they have reported since they've gone public has been pretty damn good, at least to me.
Look, Karp's playing a different game.
Alex Karp. Yeah.
Okay, and I think, but it's not just about Karp, Palantirians, in other words, like, it's something where from the outside, I think investors, they're starting to appreciate. But I think for really many years, when that stock was, in kindergarten or junior high school, right? And then, a lot of the investors were saying like, it deserved to be there. And then all of a sudden, triple digits, you saw what happened. I think Palantir, it's hard to say that the AI revolution happens without a name like Palantir.
Sure.
Because of what they're doing on enterprise, because of what they're doing on the obviously on the government side. But for them, it's the same thing. It's just as stocks go up, expectations get out there. But for them, it's an execution story. And I just think Palantir is still, as you think about the ripple effect, the software piece is still to come.
At this new firm, theoretically, it is going to be where you're going to get to cover OpenAI and Anthropic going public, whether it's later this year or early next year. Would you launch coverage in advance of that happening, as we've seen some shops do? And what are your thoughts on an OpenAI and Anthropic? Yeah,
and I've seen when coming, I've never done that before, but we got.
I never did that.
Yeah, but again, it's like, I understand, I think in this new age, like we talk about like in the age of AI, we're going to see like a lot of things. Me and you that have done this for decades, there's going to be new ways that companies are covered in terms of the way it's approached. Look, my view in terms of OpenAI and Anthropic, it's really foundation of the AI revolution. And I do believe as these companies ultimately go public, just like SpaceX, I actually think it's better for the market. It's transparency. I actually think that's very healthy for just broader tech. But then for them, it just comes down to like who gets out first, what, relative to the different views in terms of what Anthropic's done with the models, obviously versus OpenAI in terms of what Altman's done. And you look at the Apple lawsuit, and I think that just speaks to less about the lawsuit, but just shows the arms race. It's happening across the board. It's not just two companies, right? You're going to start to see a lot of converging in this AI revolution.
It's good to see you.
It's great to see you.
Really, congrats on your new firm.
Thank you.
You got to get me one of those jackets, dude.
Look, I want to get you a jack like this, especially with your
Sign.
jack.
I need you to sign it, though.
And then you wear it with one of your Saz t-shirts.
I will.
And the glasses. I think that's the look. In the Corvette.
Your success is well deserved, Dan. Good to see you, man. Great. In a new drop on my Power Players podcast today, I talk with a dynamic market duo at Robinhood in Stephanie Guild and Steve Quirk. We dove into a range of topics, including the future of SpaceX shares and the likelihood of $150 oil. That would suck for my Corvette. Both relevant topics as I stand here right now. You can watch the episode on Yahoo Finance, our app, YouTube, and Samsung TV, or listen on Apple Music, Spotify, and Amazon. Be sure to leave me a review and a like and subscribe where you can. I love the fan feedback. Julie Hyman has you next on Market Catalyst.
Welcome to Market Catalyst. I'm Julie Hyman, 30 minutes into U.S. trading day, and let's take a look at the major averages today. We are seeing kind of a sell-off, but it's a mild one depending on where you're looking in the market here. So we've got the Dow, little changed, right? It's only down not even 0.1%, a little more than 20 points. The S&P 500 down 1/3 of 1%, and the Nasdaq down 0.9%. So kind of a step down depending on where we're looking here. And in particular, technology is where we are seeing the steepest selling. So I'm going to get straight to it and take a look at what's going on in semiconductors. semiconductors today. It's an interesting story because on the one hand, you had Taiwan Semiconductor come out, beat estimates, raise its forecasts, and increase its plans for capital expenditure. So increasing its capacity because it does see demand. The shares, though, are down 2.25%. And part of that could have to do with what is going on in South Korea, where regulators said they were going to put a pause on new filings for leveraged single stock ETFs. If you've been watching and listening to us, you know that what's been going on in South Korea has been getting a lot of attention, that there have been sort of an explosion in leverage, particularly leveraged ETFs and margin debt. So regulators there stepping in to try to put a little bit of a curb on that. There's very high retail participation in that market, and there are some concerns about some of the knock-on effects. So as a result of all of that, we're seeing a ripple effect here. We did see some of the chips fall yesterday. If you look at Micron, for example, and you look at two-day chart here, you see the declines that we've seen in the past 2 days are now close to 12%. So you had selling yesterday in the U.S., spreading to South Korea, then this news coming out South Korea, and now the selling coming back around to the U.S. So that's a lot of the pressure we're seeing today. If you look at the broader Nasdaq 100 here, you see that it is a little bit more of a mixed picture. A lot of selling in the chips. NVIDIA, of course, Broadcom is on that list, but still also seeing some weakness in places like Meta and Tesla. SpaceX, by the way, which fell yesterday to below its IPO price today, is back above it, 136.68 at the moment. And then if you look at sectors within the S&P 500 here, tech is the worst performer. Healthcare, we had some healthcare earnings today that we're going to talk about later, up the most, followed by consumer staples. But I actually want to go back for just a moment here to the S&P 500 and take a look at the year-to-date chart, because we do have this 10% gain year-to-date, but the record high that happened back in June, we haven't been able to reattain that level. We kind of been sideways from there, bumping along, but haven't been able to surpass it once again. We'll see if earnings do that. But let's talk more about where stocks in the U.S. could go from here. For that, we're joined by Seema Shah, Principal Asset Management Chief Global Strategist. She's joining me now. Seema, as I mentioned, we had that record high. Stocks then have sort of been seeing some more volatility since then, but have largely gone sideways, even as there's been some rotation underneath. So my question for you is, what is the next thing or things that prompts that next leg upward, if indeed you think the next leg is going to be upward? Which group in the market, or is there going to be a catalyst? What are you looking at?
Hi, Julie. Well, I think the key thing, the key next catalyst has to be earnings season. It's a really, really important earnings season. I think what we've seen in the last couple of weeks with the volatility, the rotation even, it's mainly around repositioning, kind of evaluation reset around the tech trade, around the AI trade. So from here, we really need earnings to reinforce this very strong fundamental story that we do believe is firmly in place, and then try and rebuild some of that cyclical momentum that was in the market prior. In terms of what next, which segments, well, we do still believe very firmly in the AI trade, but I think that provided the macro backdrop is still constructive, then we should see other sectors across the US and other parts of the world perform stronger. And so there is a lot of opportunity in other sectors. And remember that the AI trade, although it's been really focused specifically on stuff like semis, on the hyperscalers, it is broadening out. You are seeing the beneficiary, a lot of the AI beneficiaries now starting to have that positive performance. So there's a lot of opportunity ahead, but we really do need the earnings season to deliver as high as expectations are in for.
Well, as you say, I mean, on the one hand, you could say like everything's AI now, sort of to some extent, right? Most enterprises are using it. But in terms of the AI specific trade, where do you see the underappreciated areas of that?
Well, there's, of course, look, there's so many question marks around the CapEx build out, whether the companies are going to the market too much, are they asking for too much debt financing? And that, of course, is focusing people's minds on the potential for return on investment and real question marks around that. Now, from our perspective, as we do see earnings continue to deliver, some of those question marks hopefully should be answered. But this is, in truth, this is going to be a question which keeps coming back to the market and keeps disrupting it. So, from our perspective, we do think it's an upward trend, but there will be a lot of volatility around those segments. What we definitely need to see continue, though, is the hyperscaler CapEx. Their earnings need to be strong because they are really the foundations for the entire AI ecosystem. So that's a key thing that we'll be watching out for.
Do you think that they will be?
No, we do have quite strong perspective on that. I mean, look, it's also worth saying that whereas 18 months ago, even 9 months ago, this was really a one-way trade where anything that was to do with tech would generally perform well. It was just an upward move. And now what you're seeing is there's a lot more dispersion. And I think the reason for that is the AI CapEx story is maturing. So this is when you start to see the division within the segments, the winners, the losers. And so really understanding which of the specific companies, what are their balance sheets, what is their cash flow, what's their competitive moat around them, and how much are they, how much is a build up for what they're doing? Is it likely to be successful? So it does become a case of dispersion, winners and losers, and really that stock selection becomes increasingly important at this point of the cycle.
Seema, I also wanted to ask you about central banks. I didn't mention it earlier when we were talking about South Korea, but the Bank of Korea happened to have raised rates today as well by a quarter point. We heard from Kevin Warsh this week testifying before Congress, and I'm curious what your takeaways were from that. Do we learn anything new from him that is material to sort of how you're thinking about the rate outlook?
So I don't think he said anything we hadn't already heard. I mean, he's stepping away from providing that forward guidance. So that does take away a key element of what markets had been relying on up to this point. He has, of course, reinforced their commitment to price stability, and he did certainly sound a little bit hawkish. The other thing we have to keep in mind is that although this week we've had some really good inflation reports in terms of weaker than expected, suggesting that inflation isn't as much of a concern right now, he has also emphasized, along with a number of other Fed speakers, that these are just one reports, and what they need to see is that this is being repeated. So whereas July, it certainly seems like there's not going to be any kind of move from the FOMC meeting, each meeting from here is really dependent on how that CPI report is performing. The jobs report is also important, of course, specifically with regards to wage pressures. Are you starting to see wage pressures build up? If you are, well, that would really be a concern. I mean, from our perspective at this point, we're not anticipating the Fed to change rates at all in 2026, but we are cognizant that the risks of a hike have increased over the last couple of weeks. And so particularly with the re-escalation in US-Iran tensions and with the rise in energy prices. So it's still a very, very dynamic story at this stage.
Yes, it certainly is. And we'll be talking to you as we go along. Seema, thank you so much. Appreciate it.
Thanks.
Coming up, I mentioned healthcare stocks rallying. At least part of that is due to United Health earnings, the company raising its full year outlook. We're going to dig into that and some other healthcare movers coming up. UnitedHealth is raising its full-year profit outlook after reporting strong earnings. The company is pointing to better handling of higher medical costs and improving AI efficiencies across the business. Jared Holtz joins me. He's Mizuho America's healthcare equity strategist. Jared, it's good to see you. This was such an interesting quarter, right? Because we know that the medical costs have been an issue for UnitedHealth and really across the industry. And it seems like they made some real progress here.
Yeah, for sure. This is probably the best quarter out of the company and maybe the entire managed care industry in 3 to 4 years. A lot of progress being made for sure on the pricing side. You know, that this is a business that can sort of reprice its goods and services annually. I think they did a really good job of that. And then they called out Medicare Advantage as being the one market that really drove a lot of the upside. So I think there still might be some lingering issues related to commercial insurance from a utilization standpoint and also Medicaid. But Medicare Advantage looks like it's, you know, in a really good spot for them and maybe for the industry.
Yeah, and that medical loss ratio, so basically the amount of premiums that they're paying out for costs, 86.7%. So they talked a little bit about how they were doing it. You talked about maybe some of the pricing power they had. They called out AI also as helping with some efficiencies. Do we have, any good insight into like more granularly what levers they pulled here?
Well, some of it is on the cost side. You know, a lot of it is on the pricing side. And then there's a good amount of conservatism that management sort of embedded into guidance earlier in the year. I think the way that they set numbers coming into 2026 sort of assumed that trends either stayed the same, even potentially got worse. And we're seeing the trends are getting a little bit better. So I think when you look at that and you sort of like juxtapose what's actually happening in the market versus how they were predicting the year would go, that's where I think some of that benefit and the upside is coming from. So I think it's multifaceted. Some of it is, macro, some of it's company specific.
And also talk to me about how UNH has been trading, because those shares have already been rising into this print here. So, implies that investors think that there's more to come.
For sure. I mean, this has been a really tricky space to get right. So volatile, just based on sort of the changing landscape in healthcare, really shouldn't be seeing moves like this. But it's just been very difficult for the industry to predict trends with respect to healthcare utilization, big picture. The stock started working when the Medicare Advantage rates came in a little bit better in the early spring. I think a lot of the data points with respect to utilization continue to be in their favor, so they continue to trade up. And now with this guidance raise and where the stock is trading now, I mean, even if you assume that United grows earnings 20% a year, which is well north of the historical average, it's been closer to the low to mid-teens, it's trading 15, 16 times on a 2028 number. Again, I'm just, extrapolating some of the numbers they gave today.
Yeah.
But if you were to take the guidance for this year and grow it by 20% a year for the next couple of years, it's getting up there for sure. So, obviously the street has an extreme amount of confidence going forward here.
So then the next question becomes, what does this tell us about other companies that have to report? We got Elevance yesterday, and that stock got pushed down. Do you think there's a read across here, or do you think UnitedHealth, because of its size and scale, it's going to be unusual this earnings season?
I think the read across is that Medicare Advantage is where you want to be. Commercial seems like it's still in a not a difficult spot, but maybe not as good with respect to how your average employee is going about getting health care, and probably at a little bit higher rate. And then Medicaid, Elevance called out yesterday as being still a little bit of a drag. So when you look at the United numbers and you kind of like compare and contrast it to others, it seems like Medicare Advantage is sort of the best place, which is why I think you're seeing such a nice move out of Humana, and then CVS has a decent business there too. So that might be the read. It's very difficult to call because we've gotten a lot of different disparate data points out of the sector so far.
Yeah. And then I want to switch gears. I know there's some other earnings out today, but the other healthcare story I'm most interested in is this acquisition that Eli Lilly is making. Atai-Beckley is the company they're buying for $2.8 billion. And I'm interested in it because Atai-Beckley makes depression treatments that are based on sort of psychedelics. And I just think that this trend of the medicalization of psychedelics has been really fascinating here. So what's your view of this buy and how it fits into that bigger trend?
Yeah, I mean, Eli Lilly has so much cash, they could do this deal 100 times. So I don't really know what to make of it, as I look at that company or that stock sort of independently. But I think what it says about the space is that large cap pharma now has obviously made a decision and has a positive view of the broader psychedelic space. If you tack on this Lilly move to what J&J has done, they have a ketamine-based product that's annualizing nearly $2 billion already for major depression and suicidality. You see this deal come across. There's been some pretty good data out of Compass Pathways, and Definium just ran a big trial in major depressive disorder with an LSD drug. So I think when you look at what's going on here, there's just a greater appreciation for sort of alternative therapies, and these seem to work really well. So I really don't know what the future holds, but it's obvious that pharma is looking and very interested.
And to your point about Eli Lilly's cash, what does that imply, not just for the psychedelic derivatives, but also more broadly? Are you expecting this to continue to be a big M&A period?
They've done a lot of deals, and certainly I think there's no doubt in my mind this is going to be a historic year for biotech M&A across the board, whether it's Lilly or Merck or J&J or Amgen. I think the likelihood that we see the most deals in volume is almost not even a question at this point. I think we're at a run rate where there will be over 30 transactions in biotechnology north of $1 billion. I don't think we've seen a year where we've hit 20. So I think that just tells you where we're at.
It does. Jared, thank you so much. It's good to see you.
Great to see you. Thank you.
Coming up, we're taking a look at some of today's trending tickers, some of those companies that we mentioned in the medical industry that also reported, and the U.S. imposes tariffs on Brazilian imports. We'll have the details next. for some of today's trending tickers. We're watching the health sector with Abbott and Merck, GE Aerospace, and Uber. We were just talking about United Health reporting earnings. Abbott Labs, another stock in the healthcare space that is rising today. It's up by 12%. That is its biggest gain, by the way, in about 24 years. It raised its guidance, came out with strong numbers. The company says earnings per share this year will now be $5.45 to $5.60, as it has seen strength pretty much across the board here. Diagnostics coming in a little bit better than estimated, in particular cancer diagnostics, after the company bought Exact Sciences and its colon cancer screening Cologuard. Remember, Abbott was embroiled in that whole questions about baby formula and its safety, but it's seen some recovery there as that sort of has passed. The company did see sales in its nutrition unit decline, but that was in line with estimates. And then Merck having some interesting news here. The Food and Drug Administration has approved a new pill to treat cholesterol. In particular, it targets LDL cholesterol, and the company says it is a more effective treatment than some statins on the market. This type of treatment was available before, but only as an injection. So now it has been approved as a pill. Bloomberg is saying that analysts estimate $4.2 billion in peak sales of this new pill, which is called Lipfendra. Those shares are up by 3%. And then moving on to some other earnings, we got GE Aerospace here. That company raising its outlook, coming in ahead of estimates as well, but the shares are down 3.5%. Some analysts are questioning the sustainability of some of the gains that the company has seen. CEO Larry Culp in the company's statement talking about robust commercial services growth. They also saw better engine deliveries in the first half, but again, some questions here about whether they'll be able to continue to do that. And then finally, another acquisition to talk about. Uber is buying Delivery Hero, the German food delivery company here. $14.8 billion is the price on this. Now, we've been talking about these two for a while because Uber had previously offered to buy the company and had to raise its price it was offering in order to get the deal done. So now it's been agreed upon, but because it's been talked about a lot, that's why you're not seeing and why you didn't see more of a move in those German shares of Delivery Hero. Well, President Trump has announced a new 25% tariff on Brazil. It's set to take effect on July 22nd. Yahoo Finance Washington correspondent Ben Worschel is with me now. Ben, the tariff headlines have died down as of late. So talk to me about this new 25% tariff, what it was the result of, because I know they've been doing some new reviews, and what it's going to mean for trade between the two countries.
Yeah, so this is a new tariff, as you mentioned, 25%. That's a result of a Section 301 investigation that began 1 year ago to the day. It was initiated last July 15th and was announced late last night. As you mentioned, this is 25% top-line duties on Brazil that the Trump administration says is due to a range of issues. But there are significant exceptions in here that have been announced. So things like oil and gas have been in there. Also, Brazilian food staples, beef, coffee, and oranges are also exempted here. The notice even notes that these goods aren't produced a lot in the U.S., and putting tariffs there would cause significant economic disruptions. But overall, this is a jump in tariffs with Brazil at the moment. Currently, Brazil has a 10% tariffs. That's part of the global tariffs that are on the globe right now. That will move up to 25%, at least on a lot of these goods. This also comes as tensions between the U.S. and Brazil over trade have been really noticeable for Trump's entire second term so far, even as the U.S. actually runs a trade surplus with Brazil. So this focus on deficits doesn't necessarily apply here. It's clearly a lot more politics going on between the U.S. and Brazil that have been a feature of this. This isn't given us a rationale this time, but Trump in the past has said he wants to have tariffs on Brazil, not for any trade issues, but because of the treatment of former President Jair Bolsonaro, who's a Trump ally who was convicted of trying to cling to power after he lost his reelection. Politics are clearly part of this today. Marco Rubio had a statement today that the current president, the one who defeated Bolsonaro, put his ego, in Rubio's words, ahead of a deal as negotiations broke down.
Okay, so this is this particular situation. Are we expecting any more tariffs imposed on other countries in the coming weeks?
Yes, this is definitely the first in what's going to be a series of new tariffs, likely in the weeks ahead, as the Trump administration kind of rolls over their tariffs into these Section 301 tariff authorities. The big one coming, and it could be within days or weeks, is a wide-ranging investigation on forced labor that covers almost 80 different countries. We're talking about 10% tariffs on the European Union and 14 other nations, such as Canada, and then 12.5% tariffs on 45 more countries, including China. So this is what Trump is aiming as the centerpiece of his renewed and permanent tariffs, and that could be announced soon over these forced labor issues. That might not be the end of the story. Well, new global tariffs, there's other Section 301 investigations ongoing, one around excess capacity that could come to fruition here, but this was all a step-by-step process that's laid out in how these tariffs get implemented. An investigation, an announcement, a public comment period, and then the implementation of the tariffs. So they're all in different stages, and they're expected to roll out a lot of them for the rest of the summer.
Well, and because of this, the methodology here, does that mean that these are more resistant to legal challenges?
Yeah. Section 301 is a pretty well-established tariff authority. Biden used this tariff authority, not in this wide-ranging of a way as Trump is considering here, especially if he goes forward with these 10% tariffs on the world. But it is a much more established, partly because of this lengthy process. It takes months for a formal investigation. They have to do it. There's a public comment period. It is all internal to the administration. So the Trump has control over every step of the process. It's more that it just takes time. That doesn't mean I will note that the end of legal wrangling is in the offing here for tariffs. There's still a lot of back and forth over the refunds from the IEEPA tariffs that were struck down in February. The U.S. paid over almost $50 billion in refunds just in June alone. So there's a lot of back and forth there. I would also add these Section 122 tariffs, just to give another tariff authority that are currently in place, have been struck down by a lower trade court. Although the practical effects there remains to be seen, they're still in effect, even as refunds have been offered. So there's going to be a lot more back and forth. Although these Section 301, the goal here from Trump's view is to put them in place and have them be permanent.
Gotcha. Ben, thanks a lot. Appreciate it. Coming up, NBA champ Jalen Brunson teams up with Just Salad. We'll hear from the company's CEO next on Market Catalyst. NBA champion Jalen Brunson is making a new bet off the court, becoming an equity owner in the popular fast casual chain Just Salad. Yahoo Finance's Josh Lipton spoke to Just Salad founder and CEO Nick Kenner.
This partnership, Nick, how did this all come about with Jalen Brunson? Walk us through it. And what does his involvement and equity ownership, what does it mean potentially for the company, Nick?
Yeah, well, first of all, I've been a huge Knicks fan for a long time. Like most of the people in the office were based out of New York City, as you could see with the Brunson jersey back there. Yeah, we went to him 2 years ago. It turns out him and his team have been a fan of Just Salad for a long time. He's truly passionate about healthy food in a genuine way, accessibility, sustainability, and he loves great food. And these are all the things that the Just Salad brand stands for. So we were driven by what everyone else is driven by to him, which is his leadership, his drive, his authenticity. And he didn't want to just do an Instagram post. It was actually his team's idea. They wanted to partner with a true New York brand that was going to be a true partnership holistically, what he stands for, work with his charity Second Round Foundation, the Dream Culinary program that he has, and do some great things together.
And I'm just curious, Nick, what do you think Jalen Brunson can kind of do here to sort of, to drive traffic and brand awareness and sales at your company beyond, just appearing in ads?
Yeah, great question. I mean, he's going to actually be in the restaurant. So he's meeting with a ton of our general managers. So from an employee morale perspective, it's never been higher. I think everyone's really excited about Jalen's leadership and energy, touching a lot of our store operators that make it happen every single day. Him and his team, they're really want to be involved on the culinary side as well. And so we're, working on some great products with Jalen that we'll be introducing later this year and next year. We're developing some other really cool products. A reusable bowl is a huge part of our brand, and there will be a Jalen Brunson reusable bowl at some point. And like I said, we're working with his charity as well to drive a lot of awareness and dollars towards that also. I got to ask you, Nick, I mean, does Jalen Brunson, does he have a favorite salad, Nick? Is there a go-to for him? Yeah, there's a go-to wrap. And it doesn't include red meat because he doesn't eat that. And it will be coming out shortly. But I can tease he definitely likes hot honey and goat cheese. I mean, hey, that sounds delicious. Let's talk more about this business, Nick. I read that you generate, and correct me if this is wrong, I read you generate $195 million in revenue last year. You expect roughly 20% sales growth this year. What is driving that, Nick? Is that new restaurants? Is that new partnerships? Walk us through it. Yeah, it's we've been growing revenue at a very healthy pace. We've been around for 20 years. So I always say we've actually grown pretty slowly. Our 20th anniversary was in May. We have 125 locations across 7 states, mostly the Northeast, Florida, and the Chicago area. We just recently started opening drive-thrus in Connecticut and New Jersey. And yeah, we're starting to scale up and open a lot more locations. We opened 20 locations last year. We'll open a little over 30 this year. And most importantly, we're just trying to gain more customers at our existing restaurants every year. And we've done a pretty good job of that over time. And I think our name is a little misleading at this point. We started as Just Salad. At this point, only 50% of our sales are actually salad. So we introduced Marketplates last year, which was a huge success, which is more grain-based, hot items compartmentalized instead of mixed. We have warm bowls, we have smoothies, we have wraps, and those all are 50% of our sales at this point. So I think we've gone from a place where people thought of just for salad to a place where I think people want to eat healthy, they want to eat fast, they want to eat affordable and have great tasting food, and I think we fill a void for that. We're always looking for line of sight into the consumer, Nick, and you have that. I'm just curious, based on what you're seeing in your business, how healthy does the consumer look? I would say Yeah, I've been doing this for a long time, and I would say it's very even. Like, I don't consider the consumer strong or weak at this point. It feels very much a market share game right now.
Nick, I want to get you out of there on this. Health officials are, they're talking about produce, and they're mentioning possibly lettuce for this foodborne illness, this parasite outbreak. Nick, I saw something like, I think, 1,600 confirmed cases. Just walk me through that. Is that impacting your business, Nick? Could it?
Yeah, I mean, so first of all, just for all the Just Salad customers out there, yeah, we have no connection to this, and our restaurants or farms have not been connected to it all. We are like crazy about quality control, so we have a very large supply chain and QA team dedicated to this. We do not use pre-cut lettuce. Our romaine and our kale come in whole, prepped on site every single day. Outer leaves are disposed of. We double wash in a sink dedicated to produce. And most importantly, we source from established commercial growers who have mandatory safety, traceability programs, verification, and we have a best-in-class program we're very proud of. And so at this point, we feel fortunate we're not really involved in this. And honestly, the CDC and FDA, they don't even know that this has anything to do with lettuce, right? So at this point, they haven't named an exact thing. It's very possible it's not lettuce or produce, and it's been clustered to really mostly 5 states: Michigan, Ohio, West Virginia, Kentucky, and we don't have restaurants in these locations, so certainly haven't been affected there.
Nick, so great to have you on the show today. Thanks for your time. We appreciate it.
Yeah, I appreciate it, Josh. Thanks for having me.
Coming up, a blockbuster quarter for the big banks. We'll get the earnings report card next on Market Catalyst. 5 biggest U.S. banks are on track to hit $180 billion in trading revenue this year if they continue at their current pace. That's according to a Wall Street Journal analysis, and it comes after blowout second quarter results from the big banks, particularly in equities trading. Joining me now is Christopher McGratty, Managing Director and Head of U.S. Bank Research for KBW, a Stifel company. Chris, it's great to see you, and these earnings have been really interesting, maybe unusually interesting, at least. I'm sure they're always interesting for you. You're super steeped in it. But I think like the equity trading numbers, the underwriting, some of the other elements have been really interesting here. Coming out of what we heard, is there even one bank that stands out as like, this one is definitely a buy after the numbers we got? Or are the trends sort of across the banks?
Well, good morning. Thanks for having me back. I would say that the trends, to your point, have been excellent, right? Capital markets expectations have ramped throughout the year, and the bar each time the banks have jumped over the bar. In particular, you called out this quarter, equity trading was tremendous. Investment banking revenues were great. Pipeline commentary was strong. And if you think about the largest banks, they've all now reported second quarter results. Morgan Stanley had a tremendous quarter. They had $148 billion of net new asset growth in the quarter, well exceeding expectations. And I think what's interesting, not only are the banks making a ton of money on these prominent IPOs, but the waterfall or the spillover effect to the broader businesses in terms of wealth management is just powerful.
And so is that what happened at Morgan Stanley? It was that spillover? It was, the wealth clients saying like, I got to get a piece of SpaceX?
It is. It's not only the transaction, the revenue gain from the IPO, but it's the wealth creation that these IPOs have had, and Morgan Stanley is right there to manage the money. So the SpaceX one was the prominent IPO in the quarter. But what they told us yesterday was they have 70% market share on the top 100 unicorns today. So that feeder system, if you will, has a really long pipeline, and we're big on the theme of sustainability and consistency. So it's not just this quarter, it's the pipeline for future growth. Okay, so Morgan Stanley as a standout in particular, but you mentioned you ran through some of the different lines of business or things that we're watching. And I'd love now that we've got these big banks, I'd love it if you could kind of grade the different trends that we're seeing. So I guess let's take trading first, which feels like an A+ to me. I don't know, what do you think? It's definitely an A+. I think the expectation was high. What's happening, I think the word here is broadening, right? A lot of the banks have talked about the build out of Asia and other markets as really keeping the ball in the air for trading. So trading absolutely is an A or A+. Investment banking, I would also say, is an A or A+. And then the question becomes how sustainable the growth rates. I think pipelines and investment banking, we're hearing that they're sustainable. We're hearing that the sponsor activity is still upside potential over time. So broad capital markets discussion, it feels like we've got some gas in the tank. So in other words, like as you were just saying, yes, it's somewhat around SpaceX, but it's not just that, because I think some of the initial thinking was like, okay, that happened. We're going to get Anthropic at some point. We're going to get OpenAI at some point. But is it reliant on those big sort of tent poles? I mean, you can't ignore the impact that these mega IPOs are having. But in some capacity, in open capital markets, deals beget deals. So there's going to be a broadening out to middle market, and the banks are there. They're there to lend money. They're there to manage their money. And so we don't think this is a 1 or 2 quarter development and you move on. We've been so suppressed for so long that it feels to us that we're going to be continuing to have this conversation a quarter, 2 quarters, 3 quarters from now, where we're beating expectations. In terms of maybe areas that aren't A's or A+, I know that you called out deposit costs as one area to kind of dig into a little bit more. How are you thinking about that? Well, I would say I would put the deposit conversation in the context that loan growth is accelerating, which is a great thing. We've been waiting for loan growth to show signs of life. The banks are putting up very strong loan growth. Now, the question is, can you profitably fund that loan growth, right? We haven't seen a cut in the Fed funds rate since December. Market expectations have moved to no more cuts and perhaps maybe a hike or two over the next year. We think we're going to be on hold. But can you fund that loan growth in a profitable manner? And a couple data points I'd really draw you to is the change Q1 to Q2 in deposit costs. Banks are starting to see a creep in deposits. And I think more importantly than just the quarter to quarter is like, where did deposit costs end the quarter? And what we saw for companies like First Horizon, they had a 5 basis point increase Q1 to Q2, but the spot rate, so the June 30 rate was up another 10. And that stock underperformed yesterday because I think expectations are competition's increasing. You saw Wells Fargo have some margin pressure on funding costs. So what's interesting is, yes, the banks can get loan growth. Yes, they're going to grow NII, but the market is hyper fixated on margins.
And, there wasn't, as you had that loan growth, there wasn't, it feels like the talks about private credit and just credit quality generally have sort of died down a little bit. Do you think that's justified? Do you think things are really okay?
They have died down. And as an analyst, you worry when there's not a lot of conversations and questions about credit because we're paid to worry. But if you think about the last 9, 12 months on credit quality, private credit's had, prominent, issues, one-offs here or there, but the industry has gotten through these. And frankly, the industry is in a very strong position, right? Leverage is low, underwriting standards are very strong. But in terms of what could wreck the party, I mean, credit quality is the obvious one for the industry, but we saw no signs this quarter that credit's moving in the wrong direction. There's a lot of talk about the consumer. Consumer credit is excellent. People have jobs, people are spending, and people have liquidity. So as long as that construct remains in place, it's hard to overly get concerned about credit.
So you called out Morgan Stanley in particular, but really all of the big banks are benefiting from some of these positive trends you're talking about. Are there any that you would avoid or be more cautious on within the largest cohort of banks?
I think, Wells Fargo is a stock where we're market perform. They've done a lot of hard work over the past few years where the asset cap had restricted growth. Now that they're through those regulatory pressures, they're growing the company and investors like to see the growth. They are having a little bit of the growth versus margin debate, and that's kept the stock from experiencing the same types of gains that you've seen from Morgan Stanley and Goldman. So Wells is a value opportunity. I think once the market gets more confidence that the NII and the margins are troughing and accelerating, that stock can re-rate. If you go down to the regionals, we stepped away from First Citizens last week. Great company, great track record of growing tangible book, very inexpensive valuation, but they're in a bit of a moment with their funding costs. Again, competitive markets, they've got some idiosyncratic things with their balance sheet they're dealing with, but the higher funding costs, I think that is a concern for the company near term. They'll get through it. They're going to continue to buy back stock, but that's a stock we stepped away from recently.
And then, Chris, just quickly, as we look out to the second half of the year, I mean, you talked about the pipeline that some of the big banks are seeing, but there is this overall feeling like, is this as good as it gets for their businesses? Do you think it is?
I think if you unpack the earnings profile of the banks, there's certain components that are over earning, and there's certain components that are still under earning. I would say credit, it's about as good as it gets, no doubt. Banks are still generating expense control, so operating leverage is still a tailwind. I think one of the biggest underappreciated aspects of the ROE is capital levels. We're 2-decade highs in terms of capital, and we did a large study about 8 weeks ago where we looked at what's unmodeled, what's usable, what's at the capacity to deploy back to shareholders. And we thought that's $115 billion across the sector. And that's not just buybacks. That's above and beyond what's currently expected by Wall Street. So capital levels still are elevated. That's suppressing returns. That's suppressing growth. That's the catalyst over time that we think the banks can really deploy capital.
Chris, thank you so much for your analysis. Really appreciate it.
Great. Thanks for having me.
Take care. That's it for Market Catalyst. I'm Julie Hyman. Thanks for watching. More Yahoo Finance is next.